And right now, we're going to talk about something business related, the rise of digital lending platforms in Kenya. Of course, you know them without even going into details of who they are. In studio right now is the Director, Digital Lenders Association, Kelvin Mutiso. Thank you very much for joining us this afternoon. I know that you are one of those who have really played a very huge role in the growth of this industry. Over the last couple of months, how many members have you registered, and how has been the growth of this sector, which Kenyans are really embracing thus far?
Well, the COVID crisis presented unique challenges for the sector, and so what actually has been happening is the solving of some of these challenges, which include the re-access of the credit bureaus. As you know, third parties are no longer accessing the Credit Reference Bureau. That has had adverse effects on our businesses, and so we are currently working together with the stakeholders, such as the regulators and the banks, to try and figure out how to solve that. In terms of numbers of new members, every month we get new and new members, and I think now we are close to 35 members joining the Digital Lenders Association of Kenya. There are over 100 digital lenders out there, and those that are members follow the code of conduct that we subscribe to.
All right. And this growth is driven by something. What would you say has been the major contributor, the major driver to this particular growth that we have seen over the last couple of years?
I think the main thing is that we are creating very innovative products that solve problems for informal sector entrepreneurs in particular. Unfortunately, a lot of these entrepreneurs did not have credit histories. They did not have, the basic documentation that allows you to get credit from formal financial institutions, such as, financial records, etc. And our scoring algorithms, which are the innovations, are the solutions that we've come up with. So we're able to lend to a mama mboga, boda boda, all these different informal sector entrepreneurs that need financing.
And in terms of access to a borrower's performance on credit, where do you get it? Because you have no securities at all. Someone borrows 5,000 shillings and there's any form of security. Where do you get this? This performance indicators?
Usually, the lender builds a relationship with the customer, and you don't lend 5,000 on the first time. You usually first check the Credit Reference Bureau to see if has this person taken a loan before, did they pay that loan on time. We also look at financial data such as M-Pesa data. What are the kind of transactions? Do they bet? If you're better, you're probably not going to get a loan. And variables like that. And then as we start building the relationship where the customer borrows and repays, we start gaining trust. And so we then up the limit over time and even add additional financial products, such as soon you're going to start seeing savings and insurance, and even discounts on the loans, where if you're a good customer and have been a customer for 2 years, why should you pay the same rate as a customer who's new and hasn't built that relationship with the institution yet? So usually those are the things that that's how we build the relationship with the customer.
A couple of months ago, the government ordered that no digital lender should forward names of defaulters to credit reference bureaus. What is the situation currently?
We are working through various lobbying efforts to get the third parties back into the formal, credit reference bureaus. This is important because we have built one of the best credit information frameworks in the world. I don't know if Kenyans know this, but we're actually number 4 in terms of ranking for our credit information ecosystem. And what a credit bureau does is that it builds a layer of trust. And if we start, and the argument we are making is that if we do not include all credit providers in this framework, then we'll start having siloed data, which is not very good for the ecosystem, because if a Mamamboga, for example, had never taken a loan from a formal bank, their record no longer sits in the credit bureau. And that now Mamamboga, say, had taken herself up to 10,000 shillings on one of the digital platforms and is now ready to borrow 50,000, she will not be able to do so. Because her data doesn't sit on the official credit reference bureau. So the argument we are making is, how do we work together to solve some of the challenges that the bureau has had? And one of the challenges that keeps being brought up is we are over-indebting and over-listing negative borrowers. There's some innovative ideas that people are talking about. One of them is that limiting the amount of negative listings that one financial institution can make at a given time, and initiatives like that.
Would you say that perhaps convenience is your greatest selling point?
Well, convenience is one of them, but actually the real selling point is that most people before could not get loans from financial institutions, and now they can. So it's that financial inclusion. If I have a small business, I can make it a real big business through our loans.
And there have been concerns, of course, that one of the negative effects of this is the high rate of lending, the cost of lending, that is, that over time, the interest that these lenders charge is very heavy on the borrowers. Is this true? And how are you working to ensure that that perception is not sold, for the longest time?
That's a fantastic question. Look, we lend to business people, informal sector entrepreneurs, and so they'll understand my argument. If I'm selling tomatoes or apples, I buy them at 10 shillings, I sell them at 12, right? And the 2 shillings margin that I make is basically covering the costs and a bit of profit. The challenge we have in this ecosystem is there's certain systemic issues that cost a lot of money, and so we have to push those costs to the consumer. And that's what we're trying to solve. We're trying to solve this through the regulation. There currently is the CBK Amendment Bill, and we're hoping that the digital lending ecosystem will be regulated under that framework. And one of the things we're really lobbying for is, can we solve some of these issues that cost us, the lenders, and so that we can stop pushing that cost to the consumer and reduce that cost significantly. So we believe that, and hopefully by mid next year, that there will be regulation and that the cost of lending will come down and the customers will have better prices.
And as we wind up, there were concerns that some of your members had employed some uncouth ways of ensuring that borrowers repay back the loans which they have borrowed, and some were accused of even calling relatives and friends of these borrowers. What is your take on that, and are we still seeing that in the market right now?
The Digital Lenders Association of Kenya's members sign a code of conduct that expressly states that debt shaming, which is the practice that you've mentioned, is not allowed. And the reason for this is that it's just not the right thing to do. We look at our products from a consumer-first perspective. The regulator insists that we should look at the consumer from a consumer-first perspective, and debt shaming does not fall into that sort of category. And so as Digital Lenders Association of Kenya, we've actually gone out and put a list on our website, DLAK.co.ke, where you can see the members and see which members do not debt shame. Those lenders that debt shame, that call your relatives, call your priest, those are not members of the Digital Lenders Association of Kenya.
All right, and I'm looking at your website right now. There is Finance Plan, there's Kuwazo, El Pesa, Okolea, there is Sutiwa, Swatika is also there, Zenka, Tala, Zazi Pay, Asante, there's Berry, Branch Pesa, then
all very good people.
There is Uber Pesa Limited. All this, are they registered in Kenya?
Yes, they're registered in Kenya as incorporated as limited liability companies.
Mm-hmm.
We do not have regulation yet, and that's what we're lobbying for.
All right. All right. Thank you very much for your input on this. Of course, this is a conversation that most Kenyans will continue having. One last one before I go. You said that you do not extend this facility to those who are engaged in betting, yeah?
No, we said that if we see financial data that shows a proclivity to betting,
all right,
and saying that when we lend our money to you, you're going to bet and not going to create value with it, the likelihood that you have a limit go up is very low. And even the likelihood of getting a loan is going to be very low.
All right. Thank you very much. That is Kelvin Mutiso, the Digital Lenders Association Director.